What's going on, guys? Welcome back to another episode here on Let It Grow Investing. I am Jeff. We're going to cover all things stocks, investing, crypto, all things, Fed rate. We're going to cover it all. So thank you very much for stopping by. Please make sure you like, subscribe, and share. It definitely does help the channel grow. And trying to get all that free information out to all of you guys and just different ways to make your portfolio a little bit better. So I'm doing my part. I did a little bit of homework this week. We're going to try to share it all in a small, maybe we're aiming for under a half hour. I got some things to do this afternoon, so we're going to try to get through this one pretty quick. A lot of different changes that I've been making to my portfolio this week. I do want to cover that. We're going to take a look at some new ways that I am looking at doing some research, right? We always look at E-Trade. We look at Reuters or Refinitiv. I'm looking at a different way right now, and I don't know why I haven't thought about it, but it's actually very helpful. So I do want to cover that. Got some other news. Well, first up, Bitcoin. I do want to do a Bitcoin check. We were at like 118,000, setting a new all-time high. I'm going to pull up my crypto.com account right now and see just where Bitcoin is at, spot price at this moment. It is about Sunday, 2:30 Eastern time in the U.S. here. We got, let me see. Let me get signed in. See just where that BTC price is hanging around right now. 119.9. Wow. Well, hey, I still stand with buying it under 80. That's where I was telling you guys to scoop this thing up not long ago. And we've had a 50% run from that point in not that long, really. Looking at the 3-month, we're up 39.78% on 6 months. That one is only around 23%. So 3 months is probably around that time. April 18th, where this thing was sitting at 80. Sorry, trying to take a look at this map here. I think we did dip right below that briefly. But yeah, we're sitting at like 82, 83 around that time. So definitely some big moves on Bitcoin. A lot of uncertainty around, currencies around the world. Maybe if you're in some of these countries that they aren't so stable, maybe even if you're in the U.S. and the dollar's looking weaker, maybe you want your currency pegged to something that's going to be standing up to all the different political forces that are out there, right? We can't, artificially modify the value of money by flooding the market or, basically just manipulating the money supply. So Bitcoin is limited and people want it. They don't want to necessarily have their currency as much. They want to be a little bit more diversified by having another currency. And this is a way to do that. It's, simple to buy. Like I said, you can use my link, go on crypto.com and get started. I'm not saying that it's a great time to buy. It is at all-time highs, so do your own due diligence. And I do want to get into some due diligence here. We will get to that. NVIDIA, we were talking about this one being the summer of 4 trillion. We did hit 4 trillion this week. We did break that number, and let's just see real quick where NVIDIA is hanging out right now on market cap. It is just continuing to run, and I still think it has more to go. Yeah, we're right at $4 trillion looking at E-Trade right now, and definitely more room to run as far as I'm concerned. The PEG ratio is still below 1.5. I still think that is a good entry point on NVIDIA. Man, I know it's a $4 trillion company. It's the first one to do it, and somehow we're already looking to $5 trillion. So if you've been here for any kind of time, you've probably been doing pretty well on NVIDIA, with the rest of us. Meta. Mark Zuckerberg, I think it was something like he was worth 49, or his shares were worth like $49 billion in the start of 2023. And now it's like $250 billion. So I believe he is now the second richest man in the world. They just bought a 3% stake in Essilor Luxotica, which is the parent company of Ray-Bans and Oakley. And they're looking to get more into AI. They're looking to do all the VR and those headsets. So maybe we're going to see some different things coming out from Meta, integrating some Ray-Ban technology there, some of the things that they have into some of the headsets with the VR that Meta is pushing out through the metaverse. So we're going to see what that play looks like. I don't know any other reason why they would be buying into Luxotica for about $3.5 billion, I believe that was. You can, definitely do your own homework and check that number. I do believe it's around $3.5 billion. The EU, the European Union, is actually looking to finalize the trade deals with the U.S. in the coming days, but definitely they're saying before August 1st, that deadline that they have been put under by Trump. We've got, Prime Day. I did not actually look at the final results of Prime Day. Some people were saying that the numbers were going to be light, but that was also on day 2 of Prime Day. And now, this year, Prime Day was actually 4 days. Sales results. Let's take a look at that. and see if we got any numbers there. So also the thing that I wanted to point out is 75% of Americans have access to a Prime account. Yeah, this is saying three days ago this was a 41% drop, but it was still early in the event. I don't know if we have an actual order or a total here. What do we got? Yeah, here we go. Amazon Prime Day delivers a record. Let's go ahead and share this so you guys can see what I'm looking at here. Prime Day, we will share. This is right from Amazon. Record sales and savings and expanded 4-day shopping event. They announced today that Prime Day 25 was its biggest Prime Day event ever, and that customers saved billions on deals across more than 35 product categories. So I'm still thinking, and not just for Prime Day, I don't think that this is the end all be all of Amazon. I think the AI side of them is definitely poised for more gains than simply just retail. I do think that this gets a lot more people on the platform checking out deals. I know we didn't just order one time or two times. It was like, oh, well, I forgot I got to get this, and then I got to get that, and then my parents need this. I got to send this that way. We got to buy, whatever kind of staples we need for our house, but then we got to buy a birthday gift for so-and-so. So a lot of different things were getting added over the top of just simply having a couple things in the cart. We then purchased more. I purchased more for the business. I needed new blades. I needed new whatever. It just kind of kept cascading into a snowball effect of multiple orders over those 4 days. So I think it was a success. We will see what happens for Amazon. I am still a long-term Amazon bull, right? I think this one's just going to kind of keep growing. So we got that there, right? We're looking at all those things. So I'm going to go ahead and close that one. What I did want to talk about, guys, is the fact of using ChatGPT to do a lot of stock research, right? And I think more people have access to ChatGPT versus some of the things that I look at every given time we're on a podcast. So I did want to pull this up. We're going to go ahead and share this one now. We're going to take a look. And yeah, I was looking at Tesla. I'm just trying to see what ChatGPT says for this. So I am looking at a lot of different things, right? I was looking at best growth at a reasonable price dividend stocks, right? So I simply just went to ChatGPT and I put in best dividend growth stocks to buy today at a reasonable GARP. And it came up with a lot of different names. Toronto Dominion Bank. It came up with Johnson & Johnson. It came up with Procter & Gamble. Now, I'm not saying that all of these are, I'm just going to buy this blindly off of what ChatGPT says. No, that's not what I'm getting at. But it does show you the different charts. It shows you a lot of different things, highs and lows, pros and cons of all these different places in one quick search. And then it's going to have where the source is from. We can take a look on the Reddit Dividend Kings. We can take a look at more feeds that they are coming up with, Insider Monkey, all these different sources as to why these are good stocks to buy at this given point in time. So if you're questioning something, ChatGPT can at least give you a basis as to what is going on with this stock. So like, should I buy CRM? This is the one that I did for Salesforce, right? This one hasn't really gone anywhere. We're back where we were a year ago, but we did get up to 367 roughly. Do we want to take a look at this one? Is it in the right AI space? Does it have a lot of growth, right? So I started taking a look, right? We've got an average price target near 346. That's 34% up. 440 is the top. 200 to 225 is the bottom, right? So we're looking at these different things. Why is it down, right? It's got some different investor concerns. Growth has slowed. It's below double-digit numbers for the first time in forever for Salesforce, first single-digit growth rate. So I did go through this. I saw some pros and some cons, and it does give you a little bit more insight as to why you're looking at these, right? So this one I had to add to my watch list, right? So I'm looking at CRM, and then I flip over to my E-Trade. That's where I do my investing for most of my brokerage account. That's where most of it is. So then I look at it. I'm looking at the PE. I'm looking at some different things here. I can do a little bit further of a deep dive into what I like here. And, there's still, like they're saying, 34.43% of upside for Salesforce. And that's pretty awesome given that most of these stocks are at all-time highs. So I've been spending a lot of time trying to find stocks that are not at the peak right now, trading out of some of the stocks that I do have into ones that I think make more sense. So yeah, I can, share this one as well. We're going to go up and just look at Salesforce real quick. So yeah, 346.92 is the average. So what Chat GPT did say at 346, roughly 34% of upside, that is what E-Trade is showing me as well. So I'm getting the same information, essentially from a couple different sources when I'm looking on Chat GPT. So it might be varied a little bit, but it does give you a lot of different things in one spot. I can get a whole SWOT analysis as to why you might want to buy this versus that. So yeah, I'm just using the technology that we have out there to help me find those stocks that I really want to buy. So now, going forward, a couple of things that I did buy. I'm going to stop sharing this for a second. We're just going to pull up the full screen. Stocks that I either trimmed or sold. I sold some DraftKings. There was a couple things in the big, beautiful bill that were kind of tucked in there that changed how gambling is going to be taxed. And it doesn't sound huge, but it does have an impact. It used to be where you could deduct your losings, 100% of it. If you lost at the casino, you weren't going to have to pay tax on those losses. Where if you won, right, say you made $10,000, you're going to be taxed that whole $10,000. And if you lost $10,000, it was a complete wash, right? So there was no money made. Now, if you make $10,000 and you lose $10,000, it's not exactly a wash because you cannot deduct all of your losses on your taxes, right? You can only deduct 90% of your taxes. So it will change your taxable income in the eyes of the IRS, at least. So it will have an impact on a lot of gamblers, a lot of, gambling stocks, especially the pros, right? If you're just, throwing $50 in, I'm watching the game and, here's $50. I do it once a year. I'm done. That's it. Not really going to be a big difference. But to the people that make a living at a sports betting or at the poker tables or whatever they do, that is going to be monumental. So I don't know that it's going to have a severe impact on DraftKings. I did see that I was up fairly decently. I still do have some covered calls on that for December. I think they're at $50 and I think we're sitting like 43, 44. So I did trim out some of that. I still have a significant amount of DraftKings left. Another one that I sold that I was kind of trimming after the whole Iran US, I'll say conflict, I'll say bombing, I did sell LHX. LHX, a couple different things here, right? I know that they're a strong defense contractor. They really haven't been going much of anywhere for me for a while. So with that news, I kind of thought, even with this not great news with Iran, it didn't really affect the stock price. It didn't send it up. It's not really showing me that it's got a whole heck of a lot of upside to go. So I more or less said, I don't want to continue holding this thing. I think I've got other places to invest this money, right? Yes, this is, just the analysts, but I think our price target is pretty well capped out right here. I don't see this thing. Yes, it could go to 280, but there's more of a chance that it goes to 226. I think we're going to stay in this range longer. That's just kind of what it's done. So I think I was in this one at 180. I decided to cash out of this thing. So I've probably been in for north of a year, probably more like 2 or 3. I might have bought somewhere down this area, right? So that being said, looking at this chart, I did pretty good buying here at this 3-year low and selling at a 3-year high. So I'm not upset with this. Do I think it can go higher? Yeah, but where did I want to put my money? That's the question. I did sell a little bit of Caterpillar shares as well. That was kind of just a rebalance of my portfolio. Those were getting to be a little bit sizable, so I trimmed that back. Where did I see more growth coming compared to what I was getting out of an LHX? Well, one that I decided to re-enter was Adobe. Ticker is ADBE. A lot of different reasons here. One, I believe it to be oversold. It is at a low point. There is significant amounts of upside. They're leaning into AI more and more. I'm seeing more and more things pop up that are AI videos, AI, Photoshop like, but AI or Adobe is running their own thing. I think that this will continue to grow. I still think it's one of the tech stocks that has not really caught fire like a lot of the mega cap names. I think ADBE oversold, fairly valued. You got around 34% of upside. I'd rather have some of that money from LHX and AD. Number two, well, this was a busy week for me, guys. LLY, talked about this one again. I still think that there's plenty more upside in a pharmaceutical name like Eli Lilly. 27% of upside. Again, LHX, nothing left to give. So I wanted to get out of one, re-enter into something that, again, I believe is oversold, and this thing is due for a bounce. I think ChatGPT said similar. It's got a lot of upside. There's a lot of potential, pipeline strong, a lot of good things going on over there. UNH, I know there could be some government shakeup with insurance and healthcare. Again, I still think that this thing oversold. Yes, some of these price targets have come down. I still like 18% of upside more than zero. So I've been buying into United Health as well. Google, again, when I was pulling up some ChatGPT, they did say that Google is has a peg value under 1.5. That was another one of my searches that I ran, was show me stocks with significant growth, peg values under a 1.5. Remember, the S&P sits around a 2. That's the price earnings divided by the 5-year forecasted growth rate. So we are getting a decent entry point into Google. I don't think that it is caught fire like a lot of the other names. I think there's a lot of growth left. I think they're really leaning into AI as well. So Google, I don't think it's really going to destroy their search business. So I want to get in this one, average in just a little bit more, and make this a larger position. I did buy some Amazon. We've talked about that one time and time again. I still believe that is a great name. ULTY, I do kind of want to take a look at this one. We'll run this through ChatGPT as well, right? This is a yield max ultra option income strategy ETF. That is a mouthful. I'm aware. Essentially, they're trading options, covered calls, this, that, the other to make income. I don't know that I've even brought this one up. I have this one in the micro strategy ETF that is also a yield max ETF. And they are paying north of 100%, and this is weekly. So I don't have that much into this thing, and I'm getting, I don't know, $30 a week in dividends by simply owning this. This is not going to be for everyone. This is going to be volatile, but it is really cool to see these dividends just rolling in. So essentially, if you put $1,000 in a year, you're going to get $1,200 in dividends. And it doesn't really make sense. I know it's volatile. I know that we normally aren't looking for stocks with more than like a 6% dividend yield. So take that with a grain of salt. A ULTY dividend safety. What do we want to search? Maybe that's a good way to not Ulta. That's not what I clicked. Let's just go ahead and type in ULTY yield max ultra and see what it comes up with. Trailing 12-month dividend yield 119, extremely elevated for an ETF. 30-day yield, no net investment income, only option premiums and capital return. 100% return on capital, not income. We got often signals elevated distribution risk, not sustainable cash income. Could erode your net asset valuation over time if losses aren't offset elsewhere. So you are getting potentially a stock that trades lower than this $6 that it is. Oh, sorry. This is ChatGPT. So it may erode the net asset value over time if losses aren't offset elsewhere. No buffer to support distributions if market goes against the portfolio. Uses covered calls and leverage, capped upside with full downside exposure. So you're not really going to get gains on your underlying stock shares or ETF shares that you purchase. This is simply just paying you back this distribution. So not something that's going to be for everyone. I'm aware of that. I just wanted to point out that it is something that I am nibbling in. I know that it's not going to be considered safe, right? It is not in the conventional sense a safe dividend play. Funded largely by return on capital, there's little protection if underlying assets underperform. So yeah, we do have some things to consider there. This has only been around for about a year, but it is paying well for now. It's not going to be a long time for everything. but I do know that there's risk. I did want to bring it up that I am buying that. Civitas, I did buy some Civitas. We added more to the oil. And again, something that is more high yielding. I do believe that this thing is oversold. The price earnings is sitting at a 3.65. Well, let's take a look on analyst research side of things. This thing did come down significantly as oil had underperformed. The price per barrel has gotten lower. We do have significant upside, and we're getting that 6% dividend yield. So again, potentially more upside than what an L3 Harris would be. And I wasn't really seeing, even after poking L3 Harris with some of these, Iran missile strikes and everything going on in Ukraine, Israel, it's not really going where I want. It's not getting me the growth that I want or the dividend that I want. So trying to find a reason to be in it, I really wasn't finding that. So I decided to get out of it. Another one that I'm looking at or that I actually invested in would be United Therapeutics. We do have some people on the page, on our Facebook page, that do work for United. And I know that they've had great success over there. 23% of upside, sitting at 295. This did just get some recent buy ratings. I think they just came in at like 380s. We had a 385. That was the end of June, a 330, 328. I thought we just had another 380. When did that 430 come out? June, we had a 405, a 400, a 432 from Jeffries. So some upside here as well. So a lot to be on the lookout for with United Therapeutics, UTHR. The last one that I did buy, and this one is one that I did find from another podcaster. It is something that I was trying to take a look at, and this one is CDNS, Cadence Design Systems. Essentially, I'm going to stop sharing this for a minute. We're just going to go back and talk for a minute. Cadence is a AI developer's insurance plan, flight simulator, trial and error platform to see if these large language models are working correctly before they are deployed. So, whoever is running a new large language model, they take it to Cadence. Cadence tests it. They, try it all out, make sure that there's no faults, potentially saving tens, even hundreds of $1 million before these large language models get pushed out. So there's a lot of different trial and error things out there. There's only 3 main companies in this space, Siemens, and then Synopsys and Cadence. Cadence has a lot of the market share. They have, I believe, around 30%. They are growing rather rapidly. Let's take a look here. I'm going to share this at this point. We're going to take a look just at what ChatGPT has to say. And let's take a look. We're going to go stock comparison. We're going to share this one. So we've got these 3, right? It does this whole write-up essentially for you. Cadence versus Siemens versus Synopsys, right? So we got Cadence at 320, roughly where I bought it. Synopsys at 560. And then we've got... I didn't bring up the chart here for Siemens, but that's okay. We got earnings, 34% EPS growth, 23% revenue increase. Strong buy, not a whole lot of upside, but I do believe that this thing is going to trend higher for longer as more people come to market and try to get their large language models out there. We've got long-term performance has been strong, 32% annualized over 10 years. Recently improved to a 71 on relative strength index. We are looking for this to get above an 80, which is around 326. The margins for Cadence have been much better than Synopsys and Siemens. They have a very strong, management team. There's a lot of different things going well for them. The earnings are better with them. The growth has been better. The margins have been better. So there's a lot going on for them. We can go through what Synopsys is doing. They're beating guidance. All of them are in the same geopolitical tailwinds, right? The China export curbs have been eased. So early in July, we had this lifted for chip design software towards China. So this applies to all 3, Cadence, Synopsys, and Siemens. Cadence and Synopsys were 5%. Siemens regained full access to their already developed China business. Have helping all 3 of them. Synopsys and Cadence have larger U.S. market exposure, possibly making the recoveries more sensitive to future policy shifts. So yeah, quick comparison, right? So this is all just ChatGPT. I didn't put this together for you. This is simply what they threw into a chart for us. So yes, we've got year to date only up 6.7%, which is another good thing, right? It has taken off, but it is not uh, all that outperforming from where it was this time last year. So we're getting a lot of great news essentially for free. So all three are going to be strong buys. We're looking at relative strength of 71 and a 76. Yeah, 5% gain after China, and they got their access back, right? Dividend only for Siemens at 2%. This was electronic design. What did it stand for? Now I got to look at what is EDA. Cadence, EDA. Let's take a look here. And electronic design automation. Sorry. I had to do that quick search for you. We got a lot more here, right? So we got balanced growth with value. Cadence is solid, particularly if it breaks out above a relative strength index of 80. High growth. Synopsys seems to the strongest pure play candidate backed by earnings, momentum, and analyst upgrades. But this is a good balance of growth and value, which I think sometimes that's what we want. We don't want to have these super high risky ones. We want to have more of a balance sometimes. So I do really like where Cadence is. I like the business. I like that it has secular tailwinds from both China and AI, but developing and really being that flight simulator type software for the AI space. So a lot of different things that are good across all three of these companies. But for me, I wanted to go with more of that growth than what Siemens would have to offer, but also having good valuation at this point in time. Is it a steal at these prices? Not necessarily. There are some higher numbers when you're looking at them. Now I'm just looking at Cadence by itself. So now we are looking at PE ratio of an 81. That PEG ratio is high. I'm aware of this, but the growth has been there. And I do think that this thing will continue to run. Goldman initiated coverage by price target of 380. KeyBank says 358 with reduced China risk. We had year-over-year revenues increased 23%. Gross margins of 86%, return on equity of 29%. So I like a lot of the things that I'm seeing here. 30% of the electronic design automation business, limited near-term growth, and that is changed. So that is going to be a very significant player for, China, right? We've got a lot of gains to have over there. So a lot of different things. Strong financials, lots of cash, AI-driven demand, risk factors, high valuation may limit near-term returns. So I did say that. I'm nibbling here. If it drops, if it goes below 300, I'm going to be buying more. I'm probably going to be buying more for the next 6 months, give or take. So mostly bullish, average price target 327. Elevated PEs, I pointed that out. If it goes down lower, I'm going to continue to buy. If it drops by more than 20%, I will double my regular buy. So if I'm buying one share a month, I will be buying 2 shares a month if it drops below 20% of where it is right now, which would be like $60, $270 roughly. That's where I'm going to be doubling down my purchases into Cadence. So that's what I'm looking at, guys. That is a lot of what I'm looking at here. A couple other things that I do want to point out. Other stocks that I am really looking at long term. A couple that have come across that I am more and more interested in. First up is going to be Uber. I don't know that this is the best time to buy this thing. It has had a significant run since the start of the year, right? We went from about $60 up to around $100. That is, a very hefty move, north of 50%. I don't necessarily want to rush into this thing. May I buy a couple shares? Possibly, probably. That's where I'm looking right now. The management here looks great. The growth trajectory here looks really strong. We got a lot of the things that Tesla has, but they're going to be on just simply the ride sharing side of things, right? So we're looking at a company that can, both deliver people, deliver food, deliver packages, whatever else. If they get into more robotics, full self-drive enabled, Waymo enabled, whatever it might be, I do think that Uber will stand to benefit, greatly from a lot of those trends. So I really do like Uber. It is something certainly that I am going to be paying attention to. Shopify is going to be number 2 that is going to be high on my watch list right now. Again, one that I think needs to come down before I go ahead and get into this thing. But a lot of trends are really being friendly with us right now, and the trend is your friend. I think that a lot more people are going to be building out on Shopify, and I think that could be a big driver for growth going forward. And number 3 was that Salesforce play. This one could probably be purchased sooner than later. I'm a lot more comfortable buying Salesforce versus Uber or Shopify right now. So maybe I add that one this week, right? So that is what I got for you guys. We added Adobe, Cadence, Eli Lilly, United Health, Google, United Therapeutics, Amazon, Civitas, and the ULTY, Ultra Yield Max, Ultra, forget what it was. Let me just pull it up again. There's too many words. Yield Max, Ultra Option Income Strategy ETF. So yeah, there are expenses, there are high yields, there are risks there. It is not foolproof. I am in it for what I'm in it for, and that is strictly just collecting that dividends. And I'm not going to get too overweight in this thing, but I do like raking in those dividends. So yeah, that is definitely something that I am trying to build up. That is one of the reasons that got me here. Using your cash to pay yourself in dividends, right? And I'm now above $18,000 a year in my dividends, and I'm just having those things reinvest right back into them, except for ULTY and MSTY, where those are coming back, and I'm deciding how to invest the funds from these ETFs that I have and where I want to put these funds, to best use, right? They're paying me as much as I have invested into them. They're paying me more, so I'm going to put that money back somewhere else. Yeah, hopefully that guy gives you guys something to take a look at. NVIDIA over 4 trillion, Meta buying into Essilor Luxotica for potentially VR. We've got the EU looking to make deals sooner than 8/1. So maybe we're not going to get such a sell-off in the short term from those tariff announcements, as more people are coming to the table sooner than anticipated. Also, why the market is trending higher and higher as we go forward. The week was high overall. I do want to just do a quick recap and say, where was this week? S&P, we started around 62.22. We closed around 62.59. I'm guessing the NASDAQ was probably the big gainer on the week. We had 20,405, and we're up around 185 on the week. So not too hateful there. And the Dow, let's just, we'll go through the big 3 and see what we got there. This one was, man, what made my portfolio look so good this week in comparison? 44,326 to 44,371. So very modest gains there. We gave some of it back on Friday, though. So, but I really wasn't hit too hard on Friday. You let me know how the stock market worked for you guys this past week. So I guess some of my stocks that were really doing well are really outpaced some of the other ones. And yeah, that's what I got for you guys. Thank you very much for stopping by. Please let me know what else you guys want to see. If you want to see some more news about tariffs or individual stocks or whatever else, how to start, how to stay invested, when to buy, when to sell, let me know. I would definitely appreciate your comments. And thank you very much for stopping by. Please make sure you like, subscribe, and share, and I will catch you guys in the next one. Take care.